Let's just take the argument you're angel investing and you have a 3,000x on something, right? Like, which some people obviously have. What do you do then? You're probably going to go and like, okay, let's say I made like $5 million off that one investment. I'm probably going to go buy some real estate or something, or like, buy into some assets that may be income generating or, a little bit more. So I think almost anybody would do that, right? And so this fund manager strategy is probably some way to at least open that opportunity to myself in a different way as well. I'm getting into fund management first and foremost because, I want to work with founders full time, right? And there's definitely kind of like missionary aspect to it. But, if we're looking at surely from a finance perspective, it lets you increase, I guess, like the breadth of asset classes you can start exposing yourself to over time.
And we're live, rationalvc.com. Iman, nice change of settings today. You finally figured out how to use your lighting camera. You're finally turning pro as, is it Stephen Pressfield says, turning pro?
I don't know, but that's rich coming from you because you look like you're in a dungeon, bro.
Yeah, I'm mid-moving, so apologies for the lack of lighting, but the South Persian skin is in its original tone because I'm sun deprived in Northwest Europe. So this is actually fun fact. The first time in Rational VC history, someone has suggested, how about I come on the pod? Because of their pedigree caliber, I've said absolutely, because we actually have plastered on our website by invitation only, and we always just reject kind of anything that comes in. So, and we have had some very, very interesting names, but guest today is actually, I think I'm the first podcast you'll ever go on, or the only podcast you'll ever go on in history, who will be able to pronounce the surname correctly. So I'll say it the correct Persian way. It is Arian Ghashghai.
Wow.
Ghashghai.
I'm gonna clip that out and just start distributing that as because people ask me all the time, how do you say it? Someone said it. Here you go.
Yeah, man. I'll give a quick overview of your background. You ex-founder, studied computer science at Georgetown, I believe. So very Iranian of you to attend Ivy League. Then you became AI ML engineer at Meta, previously Facebook. You joined a few years ago when it was Facebook back then, and you started throwing angel checks on the side. You then launched your own small, or now maybe large, it's what I want to find out all about today, Earthling VC, investing in a lot of AI, VR, deep tech, etc. I actually first came across you, I think a couple of months ago when on LinkedIn and Twitter, sometimes someone goes on a podcast and it makes a bit of noise because the headline was that at Meta you were earning over $300,000 or $350,000, and 90% of that was being invested in startups, which I'm certain that makes you the world's most aggressive venture investor, which I guess hat tip kudos on one side. But then the other side of it is you actually saw the video or podcast that Iman and I did last year called Should I Start a Fund or Syndicate, where we go through 5 options that Ryan Hoover, founder of Product Hunt, had he had a thread on this. And we actually made a sort of entire video discussing this. So our discussion was essentially discussing the 5 options, sort of angel investing, scouting, joining a fund, running SPVs, or starting a fund. And you said to me, you've sort of kind of gone through this journey of all of these things. You're doing some impressive things now on the investing side. So here we are. Before we get into anything investing, I want to know people can probably hear more about your story on other things you've done. I'm curious to know why or how you know 7 languages.
Well, let's put it this way. So I grew up between 4 of them. So obviously English, living in the US, all of that. Germany, I was born there. I'm a German citizen, spent my childhood there, all that. And then when we came to the US, still kept being educated in German. Persian and Turkish dialect is from family, right? So it's just kind of spoken in the community at home. And I think when you grow up that way, you just kind of have a proclivity to picking stuff up, and I think just wanting to learn more, right? And so Dutch is one I just learned from. I started getting, I think, recommendations from Dutch clips on YouTube, and I started watching them. I was like, oh, it's similar to German and English. You kind of just start picking it up and you start watching it, and I think it's my Dutch is pretty good now. Arabic came from, I just frankly have a lot of Arab friends. I've been to Iraq, all of that, and I kind of figured, if you know Turkish, if you know Farsi, you should probably, knowing Arabic's not so bad. So learned the Iraqi dialect, which
you'll have no issue raising LP funding now that everyone's in Middle East.
I will say it helps. It helps for sure. Because actually I have friends from the Gulf that have said to me before, like, oh, you kind of get the Gulf, and like obviously you're in the tech scene, and like so that's kind of something interesting. And I'm like, well, I hope so. Would be nice.
You mean the Persian Gulf, right? Because the national assembly is going to come out.
Absolutely. Oh,
right.
I'm hardcore on that. Like, I'm not. I'll even say that to them. That like, no. It's, you even look at your documents from back in the day. It's the Persian Gulf, even in your documents, right? Like this Arabian Gulf thing is a new thing you're making up post Nasser, right? Like it's Persian Gulf, Khalij Fars, it's like, I think we can establish that. So I learned that. Again, Iraqi dialect, I realized I love it because it just also has a lot of Persian words in it, which is of course nice, but not very practical if you want to talk to like Lebanese and Egyptians. So that kind of falls flat, which is where a lot of my friends are from. And Spanish, I think I had to learn in school, and I think that covers 7. So I kind of, again, a few languages, is easier to retain other ones. And so I think it's not as great, but it's still, I was in Mexico, it was functional, so it was enough to get around. So I'm a fan. I think like I'd like to learn 10 languages at some point. It's something I like to do on the side. It's like a personal interest thing. It's a good, nice brain stimulation.
And talking of brain stimulation and being able to kind of talk to different LPs from across the world, we've seen recently that a lot of LPs, as Cyrus made the joke about, are going to the Middle East to raise funding. So let's dive into the investing conversation. You were saying offline before we started recording that you have been through the gamut of options that exist in the investing world. As someone who was a technical hire at one of the big 4, then you went and did your own thing, you've done syndicates, you're now doing your own venture stuff.
Yeah.
Talk to us about that experience and that journey and why you've ended up creating Earthling.
I think basically, to make a long story short, when my startup failed, so I dropped out actually in between college for a couple of years to do startup full time. I think, long story short, one of the takeaways I had from that was I love the early stage risk. I love the asymmetry. I like sort of just what you can create with that because it's kind of like a canvas, right? But I think I'm a pretty bad operator, and I got sidetracked easily. I got, this is cool, I should spend time here, even though I had like no business purpose whatsoever, which is kind of very, like, I guess, the opposite of what you should be doing, which is being very vertical as a founder. So I was like, at some point I want to try investing. Like, I see people do it, and I was like, this sounds like something fun, like maybe that's the better angle. And so that's why I got into it, like kind of as soon as I started making some money at Meta, or Facebook at the time. I was, immediately trying to search for opportunities to kind of get in the game, and I think one interesting thing is always like, how do you cold start your investing career, right? Like you gotta get getting deals somehow. And I think what I did was probably way more effort than it should have been, but you live and you learn, you're always smarter afterwards. And so started going through it, right? So at first I just started throwing some small angel checks myself into people that would take it, like a 5K here, a 10K there. And I think particularly early in my career, I think I got to a point when, I was very active with the companies that I would invest in, because again, I wanted to do it not as necessarily a financial instrument, but more as I want to get involved with stuff and learn and all of that. And kind of next to what I'm doing as a day job. And so, through that, I think I started building up a little bit of deal flow, and, other people I would be co-investing with would start sending me stuff, especially because like, oh, you're the AI guy, because, that's what we're doing at Meta and all of that. And so I got to a point where I was like, okay, I'm getting some deal flow. I want to start taking this maybe a little bit more, I guess, quote unquote, professionally now. And so, that's when I started thinking about syndicates, and also just, I can start doing more deals, because, instead of throwing 10K into everything, I can maybe put 2K into a deal and then kind of syndicate the rest out. And also, you have more gravitas as an investor. If I talk to a founder and say, hey, I can invest 100K versus I'm investing 5K, right? And so I started syndicating like end of, or sometime in 2021, when the market, basically, point is the market was still kind of hot, I think, at the time, or sorry, maybe into 2020. Basically before a few months before the market went in the toilet, right? Like basically is when I started syndicating. And so that was interesting for a while, but my investment thesis is basically immersive emerging tech pre-seed is effectively where I invest. And I started to realize that syndicating that gets hard, right? Because you have to like sell every deal, and pre-seed deals can be very difficult to sell anyway. And it's especially more difficult if it's kind of in like what would be construed as being more niche markets, right? So I got very irritated at some point, I think, of just having to sell every deal to every LP every time, which not only got very exhausting and like kind of anxiety inducing because you never actually realize, am I going to meet my allocation? You just started to realize it's a relationship building game, right? Like the LPs that are going to invest with you are the ones that already trust your judgment, that kind of know you, that you communicate with, you know, you can't just really kind of spray it around anymore, particularly when the market started to crash. And so I think the point that I landed at the end was, okay, what I'm doing is not conducive to syndicating necessarily. Like I have to go out and build LP relationships to do this. I'd rather just take that pain up front, do it in a fund, right? And like convince people of myself from the beginning, and then just kind of like go do the deals that I know I'm getting, because my network's very deep, right? So I was like kind of like, I know what I'm doing, it's insider, I just can't sell that publicly, right? And so there are other deals I missed out on also when I was syndicating because the founders didn't want to do it, it took too long, you didn't meet the allocation, it's like just operational overhead, right, that cost deals. And so I was like, I just don't want to deal with this anymore, basically. Like, you know, that was one consideration. I think the other thing, and this is, I think, a very crucial point, I think, if you're deciding between like, I'm going to syndicate or I'm going to do a fund, from my perspective, is both of them require LP relations effectively, right? Like, I think the only way you're going to syndicate successfully, I'm curious what you guys think, because, you know, it seems you do this pretty successfully. You know, you have to have some trust with your LPs that you have to build up one way or the other. Like whether you're pitching them on your fund or your syndicate, if you're actually going to do this reliably. The question is, what is the time commitment you want to make, right? And I think the point that I reached was, I'm spending 40 hours a week with my founders anyway, right? Be with my founders, be with other investors, basically doing quote unquote investor stuff, right? Where I was like, I like this and I should just be doing it full time, right? And so I think fund management makes more sense if that's what you're planning to do. I think if you want to be more on the operational side and be like, I actually really like being an engineer, but I like investing, maybe syndicating is better, because also just the scope of your responsibility is very different, right? But I think if you're just looking at investment technically, I think either way between syndicates and funds, it's a big LP management commitment, right? Like just plain and simply, right? So the question is just like, what do you want to do beyond that? And so I think that's sort of where the fork in the road is.
Yeah. So, I mean, there is no one right answer. I mean, as we discussed this on that episode, we said completely based on personal circumstances and preferences. Totally. But one thing which I guess is interesting to me is we have this whole notion of, and there's been memes about this among like the hyper-aggressive tech Twitter bros, whatever, like they say the barbell strategy is BS, and I'm just like, your BS. It's like there is no one right answer, but again, based on one's personal risk tolerance, we're advocates of, I guess, the barbell strategy. But even the barbell strategy, I think, is too conservative in the sense that it's 90-10, and that 90%. So for anyone listening who's not familiar, it's sort of popularized by Nassim Taleb, barbell strategy being 90% of your investments. One side of the barbell goes into almost risk-free, like treasury bills or whatever, and then the other 10% goes on the most speculative, asymmetric bet type of investing. Iman and I, you know, being 30, 31 years old, still not married, no kids, etc., still have some risk to play with, but we're still kind of, as the name suggests, while it is an oxymoron, we try to be rational and apply these kind of philosophies. Yeah. So we're more like, I guess it's more like 80-20, and that 80% is more into things like S&P 500 or MSCI World Index, and then the other 20% is startups and never crypto. And so I'm curious to know, it seems you are the exact reverse of this barbell. Yes. So you've like, it's, and I think one good thing is because people will be like, why do you have this guy on the podcast when he's the exact opposite? And I think that's exactly why we have you on, because Munger says something along the lines of, you know, you can't really have a strong viewpoint like I do about this barbell thing unless you can make the argument for the opposing side better than that person can. So I'm always curious to learn and understand all different angles, because again, another trite or cliche thing to say, but strong opinions loosely held, and with enough evidence. Or Iman's laughing because take a shot every time I say that, but it's like,
be dead on the floor.
But I guess one assumption I'm going to make before I pass it over to you is you're even younger than us, I think, by a few years. And so
28, yeah. 28.
There you go. Bezanim betach there. 28. You have more risk tolerance, I guess, and also maybe just your personal life expenses, etc. You know, me, for example, I'm like, okay, I got a compound, I've got people I want to take care of, whereas some people might be, forget forget what Arian's doing. I want to put 100% of my income and take an extra 10-20% leverage and put it all into startups, which is even more aggressive than you. So do you anticipate this will change for you, or how do you see this?
It's a good question. I mean, I think up to this point, I can sort of, I think, talk about it from how I view my personal finances from kind of pre-fund manager to like kind of how I'm envisioning a kind of post-fund manager. And I think maybe why some of that transition took place. I think my opinion was generally this, right? Which was, if you work at Facebook or a place like that as a single, unmarried, undeaded person, you fall into, I guess, what they call golden handcuffs, if you've heard that term before, right? Which basically means like you're making really good money to live your life and do whatever, right? Like, and not really have to worry. But you're also not making enough to get rich, basically, right? Like like if you play the conventional game, I think even with like a Facebook senior engineer salary, like you're still playing the same game that everybody else is. I think the difference is that just you might get there in a little bit more comfortable way than a lot of people do. And so I think the question is like, what do you personally aspire to do with your finances, right? Like, what do you want for your own life, really? Like, so to be honest, like, I'm not even opposed if someone tells me they're doing barbell, right? I'm like, could be their own personal goal, right? Like, everybody has their own path that they want to go down, things that are important to them, etc. Right? Like how you pointed out, my financial strategy is not conducive to like having kids or something, right? Or like having a family or having like responsibility beyond it's not, right? It'd be irresponsible. But I can do it, right? Because my perspective is I'm fortunate enough to be in a position where I have a lot of excess income where, even if I invest that, I can still live a pretty good life. Like I would say generally my quality of life has been pretty high throughout all of this. I'm fortunate enough to be in a position like that. I think it would be foolish to not take advantage of that, to just like throw asymmetric bets at things. And like, because if it doesn't work, it doesn't really impact my life at all, because, my income is effectively so high that even if I write all of it off and I just go back to zero, like, okay, I lost some time, sure, but my quality of life is still very high and I can go kind of play the conventional game then if I choose to. But if I'm young, I have no responsibility and my income is way more than it should be, I might as well try to take bets that give you that potential upside of effectively getting independently wealthy in a short period of time, right? Or shorter time frame, right? And so I think very financially, like that's just the way I look at it. I think the other thing that I wouldn't understate for me personally is like, I almost look at angel investing to some extent, not even as like a financial strategy, as stupid as that may sound. Like, I think as the more I do it, the more I started to think about it, like, you got to build a portfolio and play the numbers game if you obviously want it to really return money for you at some point. But ultimately I started doing all of it because it's fun. So I almost consider a lot of angel investing to me is actually started off as a bit as like a consumption good rather than an investment, right? And so it's just only now, I think, in the last couple of years, and especially going to fund management now, you think about it a little bit in a more, you got to make this work from a portfolio perspective, right? Like, how do you play the game for it to return, at which way you actually start managing your own angel investment, kind of the way you'd manage a fund. How do you do your portfolio construction? How do you want to allocate it stuff so that, statistically you can justify that this will generate a certain kind of return? I think so. One of the reasons I wanted to go into fund management also was I think I could both de-risk and actually amplify that upside, right, at the same time, because you go into fund management, you're kind of changing the game, right? Because the difference, like being an angel, is I'm not, let's say, like, for the sake of argument, compared to running a syndicate. As a syndicate lead, you're still angel investing, and you're effectively getting leverage off sharing a financial decision that somebody else make. You're just effectively taking commission for obviously giving them that access. As a fund manager, you become an asset manager, right? Like, where it's entirely different, right? Where you're basically saying, I'm taking X dollars and I'm kind of promising you within 10 to 15 years, like a return of this, right? Which is a very different ball game, because on one, you don't really have responsibility, so to speak, for what people do with their own money. Whereas like fund management, you do. So it's a different game, but what that also, of course, lets you do is like, okay, I can sustain my living off doing that, which I do anyway. I'm doing it with my own portfolio, right? But I also still get this carry upside, right? So this venture upside that I've been getting from doing syndicates effectively. It's obviously not, the economics aren't as great on the carry side for obvious reasons, but you still have it. And for me personally, what I get to do all of a sudden is I don't have to allocate my own personal money into venture anymore necessarily. Yes, I have my GP commit obviously into the fund, but beyond that, like, I'm not YOLOing angel checks, right? For all intents and purposes, right? Whereas now I can say, okay, any of the excess income that I have coming in, I can actually use that to start diversifying my own portfolio, right? So for example, like I can go buy into real estate now, right? Because it's like my day job is actually to allocate money. I can still do all of that, which is fun. I can still get the upside, but now I don't have to plow 90% of my excess income into venture anymore, right? Like,
so you're no longer the world's most aggressive investor. You've calmed down a bit.
I would definitely say that at some point you do want to have your pie and eat it too, or have your cake and eat it too. You know what I mean? So it's like
Shirini.
Absolutely. You know, so it's like, yeah, I still want all the upside of venture and do it operationally, right? But like also have the opportunity to be like, you know, if I want to keep, you know, kind of exposing myself to this asset class, do it in a way that you know, not all of my money is going to it, right? And I can start doing other things, because at some point, like I think it's inevitable, right? Like, let's just take the argument you're angel investing and you have, you know, a 3,000x on something, right? Like, which some people obviously have. What do you do then, right? Like, you're probably going to go and like, okay, let's say I made like $5 million off that one investment. I'm probably going to go buy some real estate or something, or like, you know, buy into some assets that may be income generating, or you know, a little bit more. So I think almost anybody would do that, right? And so, you know, I'd say this sort of fund manager strategy is probably some way to at least open that opportunity to myself in a different way as well. That all aside, of course, the thing I would emphasize is that I'm getting into fund management first and foremost because it's you know, I want to work with founders full time, right? And there's definitely the kind of like missionary aspect to it. But you know, if we're looking at surely from a finance perspective, right? Like there is that aspect for sure that it lets you increase, I guess, like the breadth of asset classes you can start exposing yourself to over time.
The other thing which you touched on, but I don't know if you've come to, is you basically had this background being in a startup, and you said being an operator was tough because you just weren't necessarily a good operator in the sense that you know, your head was turning to loads of different things. Then you go and actually like work for a big company, essentially. I know Facebook would have been much smaller, probably 20,000 or so people at that time.
It was.
Yeah, and I think what you then find is you kind of shifted, and like a lot of, I wouldn't say Iranians, but Middle Easterns in general.
Say Iranians, go on, say it.
Well, it's not just Iranians though, right? There's this aversion for working for people or having a boss. Yeah, and I think a lot of that is there's probably philosophical and
it's revolution, PTSD, control.
Yeah, it's PTSD of control, I think. But equally, I think it comes from parents and previous generations who've had to leave and therefore create something new. And we've seen the value in autonomy in that sense. Totally. But I want to bring that back to funds for a second, because the problem we had with creating a fund, and you know, we had soft commits and we were going to go down that road, but we decided not to for various reasons, which you can check on the pod that we've done before. The issue for us was fundamentally when you go out and become a GP and you have all these LPs work essentially giving you money, you know, you are, for want of a better word, their bitch, in the sense that over a period of time you have to give them returns. However, with a syndicate, you're only locked into that specific deal, and there's a belief and an understanding that nothing's going to go wrong if that deal goes to shit, because you understand what you're signing up to as an LP. Totally. How do you deal with that, you know, contradiction of you having bosses versus, you know, having LPs?
It's an interesting point, right? And it's definitely one I want to unpack. The GP LP structure, like for sure, right? You become a bit of a I guess tool for your LPs, if you will, right? As a GP, like for sure, right? But I think part of that also, by the way, is, and I've definitely done this before throughout the fundraising process as well, is just determine that these are people I don't want to work with, right? Like maybe they'll offer me money, but like, you know, I can still pick and choose like who I let into the fund, right? So I'm not completely hopeless there. I think, but your point stands. I think overall your point is completely valid. Now, I think on the syndicate side, I don't think that dynamic necessarily goes away. I think the difference is that you have, like you pointed out, you have less responsibility to your LPs, right? Because, you know, you're not, again, managing their money, right? You're just giving them access, and like your responsibility ends at like, I'm going to do some diligence, I'm going to use a memo. Ultimately, it's your call if you want to do this or not, right? Beyond that, I don't really have much responsibility to you, right? Which is also why, you know, things like management fees and stuff obviously don't exist in syndicates, right? Because you're not really managing anything, right? So it's a different game. Again, I think part of that also goes to then like back to the time commitment point. But ultimately, like even with syndicates, you still have to convince your LPs. Like you're still kind of dependent on your LPs, because if they don't want to invest in your stuff, you're also fucked, basically, right? So there is a bit of like LP relationship building and all of that you have to do, right? Which is I think very similar to what you're doing with fund GP or fund LPs. You're not fully independent either, and I think so that what goes all to say for me, right? I think all of us are doing this stuff, whether you're doing it as a syndicate lead, as a fund GP, kind of whatever you're doing as an investor. I think the ultimate end goal that you're trying to get to is to just go be a super angel, right? Where you at one point can go write 100K checks, 200K checks into companies yourself, and you literally have to answer to nobody, right? Like, I think that's what we're all trying to go back to anyway. So like, that is definitely the apex form. Yeah, I think until you get to that point, you're somebody's bitch regardless, right? Like, until you're independently wealthy, you're going to be somebody's bitch somewhere, right? That's just kind of like the reality. So you just gotta weather the storm on what kind of bitch you want to be for a while, and what works best for you until you kind of become totally independent.
Yeah, I think we've just lost him on. He's coming back. He said he had a power cut and he had to reset everything. So welcome to modern day Britain. I totally hear you. So the thing is, I guess, to add to that, end of the day, whatever you do in life, you are someone's bitch. If you're at home, you're a bitch to your kids. If you're at work,
totally.
If you want to be an operator investor and you're doing syndicates for the investing, then great. You have freedom by doing syndicates, I guess, because it's deal by deal. But then you're kind of someone's bitch at work. It's whatever you do. If you're a founder who is bootstrapped and takes no VC funding, well, then you're a bitch to your customers. You are a bitch in some way.
Totally. Absolutely. I think that's an important thing to point out, that like, I think regardless of what you do in life, and again, I don't know what it's like to be like a multi-billionaire, right? Maybe at that point, like the level of bitchness you have to somebody else is very much reduced, right? But
sure.
For the rest of us kind of normal, I guess, folks, I think part of what you have to accept regardless of what you're doing is that like, there's always going to be an element of it that sucks, right? Like that you don't want to do, but you kind of accept it because it enables you to do the things that you might actually want to do with your time, right? Or that you might actually want to work towards. And you kind of just, for me, I think it's a healthy attitude to just accept like, that's the cost of doing something I really want to do with my time. Fuck it, basically, like, so be it. Because I get asked that a lot, actually, like from by LPs, right? Is like, oh, what things do you not like about investing, or like what things do you not like about being a VC or whatever, right? Like, and there are definitely things I don't like, but again, it's like, okay, you just accept that because it's the cost for doing the thing that you really want to do, right? And so you just kind of suck it up and do it, right? Like that's the way I look at it. Like I don't really dwell on that kind of thing at all.
Yeah, and I mean, like a couple of other pros and cons of the syndicates versus fund, because as we discussed in that episode, we said it's not like we're never going to do a fund. We will down the line. At the moment, syndicates makes more sense for us for the details we outlined. But I think with a fund, you can leverage more capital, exactly as you're doing. And you said the huge downside of syndicates is that every deal, it feels like a huge raise in itself, because it's just, you get the allocation, it's like a really hot deal, and then you're having to chase LPs, and then LPs are flaky when it's deal by deal. Like they'll be in and then they won't be in, and then you got like 48 hours to close the whole thing, and then you've got someone from a tier one kind of waiting. I totally hear it. So I guess moving on, and still on the investing topic, but moving on in terms of your day to day now, have you now stopped kind of being an engineer and you're full time on Earthling?
I quit 3 weeks ago.
Wow, congrats.
So I'm very new. I felt it was a good position. Like I haven't done a first close yet, but we're pretty close. And so I felt there's just a lot of things kind of aligned where I felt the time was right to go and just kind of like double down on that, especially with to be honest, like the LP market's pretty tough right now for new and emerging managers. Like, I know a ton of people. I think I don't know one person that's saying like, oh, things are going really quick and stuff. Like, it's always degrees of like, it's slow, just how slow, right? So I felt it was the right time, like brought some good partners in. It's a good signal was there where I felt the time was right to just double down. One thing I'll actually add on the notion of partners and all of that, I think, again, kind of versus this fund syndicate thing that I wouldn't have necessarily thought of before I decided to make that jump. But now in hindsight, I'm seeing is that in the little time that I've sort of made that transition, just the way your network opens up to certain folks, like there are folks that I have in the fund now as LPs that I would have never even spoken to if I'd have just continued being an angel, right? Because there would have been no pretense for that relationship to exist, right? And so kind of like taking that jump of being like, I'm kind of just an investor to I'm a GP now, really opened up a lot of doors. And so really put me in the room with a lot of people that I probably have no business being in the room with, which, again, those sorts of things just also advance your career effectively, right? That's kind of been like a unexpected positive side effect of doing all of this that I just sort of want to like point out as something that at least I can talk from my experience is definitely one of the things I see as an advantage as well, as kind of being like a dedicated GP, again, versus just like an angel investor is just the magnitude of people you come across. I think quickly to what you're saying about day-to-day. So yeah, quit engineering full-time. I'm head down in raising right now, right? So I would say like the majority of my effort, time, and money is being spent on LPs. I mean, I still have my portfolio that I support. I still hear pitches, right? I still do all of that, but there's definitely a lot more to just bringing right partners into the fund. And frankly, you're starting to build a business, right? Like it is like a very specialized form of startup, right? So you do need to think a lot about, making sure people know you exist, right? Like positioning it and branding it and selling it the right way. And it's a little bit more than just your own personal brand at that point, right? Like personal brand obviously bleeds into it, but it's very similar, I think, to what early startup founders do, right? Like what I see my founders do that are very early, right? Which is like, all right, I got to go meet investors, right? Like I got to go do this, I got to go pitch, right? Like I got to get feedback on my pitch deck because the narrative's not good, right? And like, so I have one of my LPs help me with that. And, so it's a very similar dynamic, I would say to what, pre-seed founders do. It just obviously like Twitter likes to shed it in a different, right? They're like VCs are lazy and they don't do anything and they don't work and they go on vacation, which I don't know. I mean, maybe that's true again for like investors that are like in huge multi-billion funds, right? That have no responsibility in the actual operation of the fund. But like, most of the emerging managers that I know are definitely like extremely like they're grinding, right? It's tough, right? And it's like nerve-wracking like anything else, right? You don't know if you're gonna have a business, you don't know if you're gonna have a second fund. There's a lot to play for. Kind of, I almost look at it as like I have a specialized startup life, if you will, right? Right now, which I'm enjoying, but it's also nerve-wracking because I'm watching my bank account go down on a daily basis, right? So that's also not so fun, but that's what you sign up for.
Yeah, I think you're not taking time off because you're not a European VC. That's the difference.
Oh, they do it here for sure. It's not just Europeans. I agree. But these things will always be worse, right? But it's just the culture. But I think particularly at certain size funds, you have July is a pretty dead month, I would say.
Yeah.
Even here, like there's not a lot going on. It's a VC thing, but I agree that like emerging managers are obviously they can't afford it, right? Like they can't afford to take foot off the brake. So.
Before Iman asks something, before I forget, while we're still on this topic, there's one of my main beefs with this whole investing thing is this whole topic we've been discussing is that most VCs, the problem is that they have no operating experience, right? So they go from, let's say, banking or consulting to an MBA at Ivy League and then to go straight into VC. Whereas you have tried a startup and you're very transparent and skin in the game. You're like, I tried it, I failed. Then you studied computer science and then you worked at Facebook 4 years, AI/ML. I think it was one of the early labs they launched, right? So for 4 years, you had quite a bit of autonomy running AI/ML projects over there. And then after that, now you've gone into the fun thing. So as a founder, if I were to take money from you versus Bob, who's just left his tier 1 job to launch his tier 2 fund, and his background is Ivy League, MBA, consulting, banking, yada yada, I think it makes absolute sense that I'd choose you over Bob. So that's my main issue with the whole thing, is that people won't have any operating experience and they're kind of like charlatans that they're rentsy because they live off management fees with no operating experience or prior skin in the game. Whereas you actually, the fact that you've had skin in the game, that is more important than anything because you resonate with the founders and you understand their lens and their point of view.
100%.
And I think Mac Conwell, who we had on the podcast, he tweeted about this once, which is kind of, if you're an emerging manager, you're not coming out of a tier 1 fund living off the brand cash to launch your own fund, but rather you're hustling out here kind of like you're doing, and kind of like Mac, I think he took something absurd like over 2,000 meetings or something to close his first fund, Zoom meetings. What you guys are doing is actually, as Max said, he said, this is actually skin in the game because, as you said, bank account is depleting. You're living off this. It's kind of like you're raising a fund as if you're raising funding as if you are raising for a startup. So if one is to do investing and do a fund, this is kind of as skin in the game and the most skin in the game way that you can do it, which is you've got operating experience, and you're kind of after operating, then you're launching this thing on your own or with a partner, and then you leverage your experience to provide value for founders. So that's an important point.
Yeah, I think I'll just expand on that quickly, which like throughout this process also, particularly really when I started to first go out and be like, I want to raise a fund, I got approached by a few folks about joining their funds and stuff, right? You know, and like some of these were brand name funds that you would all recognize. And, I determined very quickly, like, that's not the way I want to do it, right? I think for a lot of the reasons that you just outlined, like, I'm very big also on having kind of skin in the game. I want to be independent. I think, I believe what I'm investing in my thesis, because of where I'm coming from, I want to like execute that without compromise, right? The only way to do that is if I do it myself, right? So I think it's an important point, but I think also one advice that I would give to, because a lot of people actually reach out to me and they ask like, oh, how do I start angel investing and all this sorts of stuff and whatever. And so I think sort of the piggyback of something that you said that I think is very important is all of investing game, like whether this obviously gets more amplified when you're a VC, right? But even as an angel, like ultimately you have to make an argument as to like, why should a founder take money from you, right? Like effectively, how do you compete for an allocation in that company? And particularly as like a small angel, and this also applies to you being a VC, the best way to do that is to really like offer something to the founders. And I think that's like from an operational point of view, like that even a particular pre-seed is like, for me, like one reason that I think I've done well here, not just with founders, but also, building my network out on the VC side and all of that is precisely this, that like I'm coming from a background where I've built this stuff that I'm investing in, right? Like I get it, I can talk the founders' language, but also I get the markets, right? Like, and I get the people that they're trying to raise from and all of that. And so like the way I've always positioned myself is I'm like that glue for you as a very early founder between like me understanding your really nerdy stuff that you're building and like maybe not pitching well, whatever, but I can see through it, and kind of helping you and wrapping that and, introing you and like getting you more capital from other investors that you might need that will kind of help grow your business. And so the reason I was able to do that is because I just was leaning into stuff I have done, right? And I know how to do, right? Like, and so that's typically like advice that I give to anybody that's trying to angel invest. Like the flip side of that is like I invest in like AI and AR, VR and all that stuff because that's stuff I worked on at a high level, right? And I understand deeply. If I was trying to invest in like, I don't know, like cosmetic companies, right? Like, or something like that. I mean, like I would probably gain no allocations because I contribute like zero value to those businesses, right? Like, so I always tell people this that are like starting out is like, you're probably doing something, like just go lean into that also for like your from your investment strategy point of view, because ultimately like that's going to be the best way to compound your own presence and gravitas as an investor, right? And so lean into crap, right? Like don't go try to play a game that you don't understand, right? Like everybody I think that wants to invest, there's something that they know, there's something that they've done, there's somewhere they can contribute value. Just lean into that and really like build your investment career off that ladder. I think is advice that I would give to anybody that's like starting.
You mentioned something interesting there, which is it applies to all parts of life, right? So whether you're creating a fund or you're creating a startup, whatever it is, leverage what you already are good at, do what feels like play to you, but looks like work to others, which is the important part of that discussion. Take a shot, Naval. But the thing I wanted to move on to is something else you mentioned, which is you talk about AI, you talk about VR, AR as being your thesis. Okay, pre-seed level. Yeah. Everyone knows why AI is shit hot and it's great and what use cases can emerge now and in the future. Yeah. What I don't really understand is VR AR was hot for for a period of time. Now it seems to be less hot and actually less clear as to what the value opportunity looks like. Why did you choose VR AR, and what's interesting to you about it?
So basically the way I actually put these things under umbrella is I call them technologies that augment human capability, right? So I think in other words, it's like they let us do new things in computing just very fundamentally that we weren't able to do before. And so I think, like you pointed out, AI I think is pretty obvious. The way I even see them together is like effectively AI is immersive technology for the brain, if you will, right? Like if you look at it from a digital content point of view, like it creates a new level of dynamism and just effectively intelligence that didn't exist before. Though I should need to be careful about saying that because AI has been embedded in everything that we've been using in digital tech for God knows how long, right? But but kind kind of what you're seeing now, I think, is starting to really exemplify like where some of these things can go. I think the VR side is, and I had this moment the first time I tried a headset, which was my first day at Facebook. Actually, they made us try the Rift at the time, so it was like the tethered headset, and I was actually a bit of a skeptic. I was like, because I remember there was this demo that they made everybody do where you're in the headset and they place you like at the edge of a building, and then the instruction is take a step forward, which effectively in reality would mean you're actually falling off the building, right? But so they ask you just go take a step, and so like there are all these people in front of me doing it, and I'm sitting there thinking to myself, like, nobody's doing it, right? Everybody's kind of like freaking out or like they're super hesitant or something. I'm just sitting there, I'm like, these people are like, come on, it's like, intellectually, like, you're not actually going to fall off. Like, why is this such a big deal? So I was like, give me the headset, I'll do it, right? I'll take the step forward. And so I put the headset on and I couldn't do it either, right? And I was just like sitting there and I was like, okay, so like kind of this light bulb went off over my head, like kind of when I first played with ML for the first time, like 9 years ago, that, okay, this is really rough around the edges right now still, but I can see where this is going, and largely because as much as AI is this immersive part for the brain, I mean, VR and extended reality generally is kind of the same thing, but for the body, right? And so if you look at the human experience as being like a combination of mind and body, it's pretty clear that actually these two things together really like merge that gap between like what we experience in the real world and computing, which is very interesting. Like that kind of at a philosophical level. But I think when you start looking down at so because of that, actually, like one of the things I did when I joined Facebook is I actually got hired to work on like integrity problems, like misinformation and all of that, because my background in ML is actually in NLP, which is why ChatGPT and all this stuff is very interesting to me, because that's where my academic background is. But I switched over to the Reality Lab side like pretty quickly after that, because I just wanted to go work on this stuff. And so, that's obviously, again, going back to this point of like why I invest in things is just like I saw it firsthand, right? Of just how it's built and what works and what doesn't work. And I think so with VR, the thing that you're even seeing now, like if I'm putting my investor hat on, there are certain aspects of it that actually work quite well. I think the problem, what's being held against VR is it for the beginning got positioned as kind of like smartphone replacement device, right? Which I personally liken the adoption curve probably more likely to like what the PCs was like. Like I think that's probably a more like realistic expectation of it, because I think particularly VR is more of like a stationary desktop replacement or laptop replacement than it is a smartphone replacement. Like there's this argument of AR, which I think is a totally different one.
Yep.
And that's more out in the future. But like in VR today, like you're seeing companies make money in gaming. I mean, I was like reading something the other day, even that like there are more monthly actives on VR than on PS5 right now, and they're selling more VR sets than PS5s,
wow.
Which is a for gaming alone. Like even if you just said the failure case for VR is the next gaming platform, which I think everybody in the gaming space accepts, right? Like all the gaming VCs and stuff, I know they're all very interested in VR. That's already a huge venture backable market. Like, there are already a ton of people making a ton of money just investing in gaming. But even beyond that, like you're seeing a lot of application in like enterprise training, for example. Like, Saudi Aramco is like super big on it, right? They're even plowing money into like VR training companies and stuff themselves, right? Because they believe in that. There's like things like also VR and these sorts of things, which are prisms of reality, which are like education training based, kind of at a quote unquote enterprise level that's really growing. And then you're seeing a lot of applications already in like fitness and mental well-being and these sorts of things, where also like you're seeing a lot of apps do really well, some of which I'm invested in. Mm-hmm. Which those are verticals that are already working with how bad the hardware actually is, right? And I think one of the things that this is probably going to piss a lot of people off, but I think Apple releasing their headset, which you're already starting to see, like, because you mentioned like VR it's not that hot, like definitely hasn't been, it's been quite cold, but you're already starting over the last couple of weeks that the discourse to really pick up again. And I think the one thing that Apple will really actually expose is how poorly Facebook has executed on this for the last 3 years. And me saying is that somebody that was there, right? Like the weaknesses in VR are like, a lot of people talk about, well, the compute's poor and whatever. Like, I honestly think some of it's just basic UI friction, right? Like the headset's too heavy, the UI is kind of clunky, some of the setup, like particularly for mixed reality, is just really bad, right? Facebook's not built to actually solve these kind of problems. Like Facebook's not known for design. Facebook's known for scaling, right? Apple, meanwhile, is known for UI and design and all this stuff. And so I'm actually pretty confident that the weaknesses in VR that currently exists are actually going to be kind of addressed by Apple. Like, again, I have no insider information on it. I'm just assuming based on DNAs of both companies, right, and what they do particularly well. And I think that will kind of open up actually a lot of what I've talked about wait, these things can actually be used for like real world stuff that's already being used for. But the way Facebook has sort of positioned the product and marketed it, I mean, even like I think everybody's seen the super lo-fi selfie of Zuck in front of like the Eiffel Tower or something, right? Where it looks like a joke, right? Where people aren't necessarily going to take it seriously for like, you can actually use this for real world problems already, and people do, right? I think Apple is gonna probably just add some of that gravitas to that industry that I think it deserves, and again, people are using it for, but because of Facebook blunders, for the lack of a better term, like just has kind of gone under the carpet. So let's see. I think next week. I mean, I don't know when you guys are going to publish this, but if at this point next week, right? I think some of the perception might change about where the technology actually is and what's going to do. So I have mixed feelings about that as an investor. But I think definitely that's going to happen. Like I'm bracing myself for the new thought leaders in VR, right? That just kind of just run off bad take after bad take. But like we've seen in AI now. But I guess all press is good press, as they say. So
Awesome. So if a founder in AI, VR, etc. wants to kind of reach out to you, or LPs are even interested, where is Earthling based on the interwebs?
I think probably the best way is to either just email me directly or Twitter. I'm a big Twitter guy, so I don't know if you guys want to link that or so.
We're linking everything.
My Twitter. You can put my Twitter and my email down there. Like either or, I'm pretty responsive on. Happy to chat with anybody.
Awesome.
And
then the last thing I want to ask you is kind of unrelated, but are there any kind of resources, books, blogs, anything you've consumed that's kind of you think has shaped your worldview in this way, in the way that you operate?
I'm going to give a really cheesy answer, but I genuinely mean this, which is I think 0 to 1 by Peter Thiel is probably the only book that I've ever read where I was like, holy crap, my worldview changed a lot. Absolutely freaking love it. I think this man's a genius, right? I know he takes a lot of shit nowadays, but like I think it's just a super smart, high IQ book. Really smart way to look at the world. And I would say that like even though I might not express a lot of the ideas explicitly when I invest, like there are a lot of like embedded concepts that I think I'm taking from Thiel that I believe in. Like does your company have a secret, right? Basically, which I kind of say is like, do you have a unique insight about an industry, right? That's new to me, right? It's something I always look for when I talk to founders, right? Or, a lot of these kinds of concepts, like kind of playing, not playing in the lane that everybody else is playing in, right? So like with AI investing now, like I'm looking at non-generative stuff primarily, right? Because I know that's being overlooked, right? And I think there's probably alpha there, these sorts of things where, these are all like kind of concepts I think at some point I took from Thiel. One thing I like a lot too, and I tried this with my own startup, right, which is actually why some of the beginning was good, was like trying to be like monopolize a small market and grow the market rather than trying to be like a small fish, right? So these are things I'm looking at as well when I'm investing, right? Like, so even though I don't express it explicitly, I think it's like had a like pretty ingrained concept or very, very ingrained thought ideas and how I invest and generally how I do things. The other book that I like and I would actually highly recommend for pre-seed founders, and also I think people that are either in VC or want to get into VC, is a book that Adam Draper just put out. So Breakfast with Pops is one that I liked a lot, also because it reads really quickly. Adam's very kind of straight shooter, going to give it to you straight, but like also just generally I think like high quality investor and like very founder friendly and all of that, and it's been very successful. So that's one I read recently that I really enjoyed, like where it's just I think great perspective, like honest perspective on the industry. So those are the first two that come to mind. I think kind of like old school, and then kind of just one that's just kind of fresh off the press.
Cool, man. Well, look, this has been awesome. I look forward to seeing Earthling becoming a tier 1 in no time, and
we're gonna do it.
We'll have you back on. We're actually most likely going to be in the States next year, so we'll all go for a cello kebab and do a part 2.
Let me know. I'll take you to the best kebab in DC. It's not Iran. It's not DC and LA. I know the places, right? It's not as good as in Iran, obviously, but we do what we can. I'll We'll do it. We'll have a good time. Thanks for having me. This was fun. So
absolutely, ladies and gents, Arian Ghashghai.
bah bah.